Welcome everyone to another episode of the Week in Italian Startup. So hitting the end of the year, what's your feel, Nick? We've been seeing some growth, so welcome again, and a bunch of good news, I hope.
Ciao, Jack. I'm great. So the feeling is good, actually. We had some few interesting deals in the current quarter. I think at least another one was announced late yesterday evening, and I missed it in this issue of the newsletter. 70 million, 70. So I think, and I hope we will have other surprises before end of year. So there's still time to get to 1.5 billion.
Yeah, I mean, compared to last year, definitely a substantial improvement. Of course, big rounds, and we can discuss about it all day. But definitely, overall, net is definitely a very good news compared to the past couple of years. I would say even more than just relative to the last only. So yeah, excellent news. Things are moving, and big players are making moves. So that's always positive. All right. Yeah, let's start with one of the big news of last week, which is Bending Spoon buying Eventbrite for $500 million with an 80% premium on average trading price. So again, Bending Spoon on the news. These guys are a machine, kind of cranking out like new deals. Very interesting again, like to package up like everything that is happening. With Eventbrite, basically, it's a fair deal in the sense that shareholder get this premium, 81 to 82%, to be precise, at about $4.5 per share, which is fair. The idea, though, is that it's not obviously the tech sort of multiple. I believe the revenue multiple over here is 1.7x of trailing revenue. So definitely not one of the AI sort of multiples or other multiple that we see in the industry. But again, the idea here of Bending Spoon has always been to acquire, optimize, and grow margins. So really, that's a great target. It's definitely something interesting for a couple of reasons. I would say, and then Nick, I'm curious to see what you think. One is kind of a legacy platform. Everybody of our generation is using it or has used it no matter what. So it's there in the mind of people, and people like it, honestly. And secondly, as AI is taking over digital content, live content is becoming again a thing. So maybe this is the hidden gem that probably will get like a very interesting upside in the future. So it's my 2 cents.
Yeah, I'm with you. So this is a good insight. If you think about it, if I'm not wrong, last year or a couple of years ago, Benny Spoons, they were acquiring Meetup.com, right? There are probably synergies there, not just in terms of technology, but in terms of market and users. And again, what you're saying is coming back to in-person events or real people meeting together to do stuff. So there's maybe an angle there. You're right.
Yeah, and really kind of breathing new life into like a company that, according to what I've seen, is kind of a flat revenue, which is around like 325 million between 2023 and 2024. And it's been pretty much stuck, between it's in the public market limbo, not really like growing as expected, but at the same time, still like a solid company there, like producing revenue and hitting some cash targets. So very interesting target. That is for sure. All right, so let's talk as well about the Shop Circle, and the reason why I think what you mentioned in the newsletter, and I think it's very interesting, is that in a certain way, what Shop Circle is doing is very much kind of drawing a little bit of a new scaling archetype, I would say, which is essentially, okay, let's give the news first and maybe let's derive what might be like the future of this kind of frame. So Shop Circle basically secured a 100 million credit facility basically to grow its business. So Shop Circle is a powered online shopping platform. Basically, they've been like acquiring different businesses and essentially like growing them inside like the same company. And they're doing that with debt. And we've seen in the past a lot of companies kind of, especially European companies, like gathering debt for their scaling. And this is typically kind of European flavored in a way. And maybe, there is something there, which is it a new way to scale, coming by? So is it the new sort of archetype for Europe, which is the scaling through acquisition sort of pattern? So instead of like raising huge amount of money from VC and then trying to grow as fast as possible, here the idea is that target, acquire, optimize, and then hold for the long term. And Bending Spoon being a master of that and being sort of the big OG right now in doing that. I can see that Shop Circle is kind of like thinking in the same lines with the same mindset. What is your feeling on this, Nick?
Yeah, I think you make a good point. So from the outside, they look very similar. I would say that they study from different points. Actually, on the opposite sides, if you look at them closely. So Bending Spoon is about acquiring scaled up platforms and optimizing them. So Eventbrite has a market, Evernote had a market. So they are well-established brands, as you mentioned. We all know what Eventbrite is. So we used Evernote in the moment in our life. Shop Circle comes to a similar conclusion in terms of execution from the opposite direction. So their point of view is in Europe, we are lacking real scale-ups. So we don't have hyperscalers in Europe. Something has been missing. And there are so many components of this potential problem across all levels: political, geopolitical, economical, geographical, languages, legal, tax, whatever you want. One of these, historically speaking, missing points was real scale-up capital. I'm not saying the 50 million euros round. I'm talking about the 300, 400 million euros round. That in the US is your standard scale-up round. In Europe is like the big private equity round. Not the same understanding of what that money is, basically. If I read the article, I would say that the point of view of Shop Circle is very interesting. So let's try to fix this scaling up problem that's mostly lacking of capital, but not only, by enabling on our platform scale up capabilities for profitable, well-run businesses that will not take the next step. And that's quite interesting. It is a real scale-up machine, not an acquirer and optimizer. I don't want to simplify Bending Spoon, so they're doing a very difficult job, but Shop Circle is building a scale-up optimizer. And that's interesting, right?
That's unique, and it's kind of getting the same spirit and getting different like playbook. So that's I agree with you. It's like kind of trying to fix this European problem. And the next question probably is this gonna be like a true alternative to the venture capital model for Europe? Maybe it fits better in this way. And the question here comes from both sides, I think. And then I'm curious to see what you think. So both in terms of fundraising per se. So maybe one company one day would be, will have the choice between like venture capital, dilution, and etc. And on the other side, like debt money, credit facility to actually, with a precise structural and strategic pattern to actually scale. And that's one way of doing this. Is it viable? Is it an alternative to VC? I don't know. But on the other side is, from the exit side, having bigger players being acquired inside like bigger companies that have that credit facility. So it kind of plays both ways. So on one side would be like the sort of the big huge rounds, but on the other side also the exit opportunity, providing exit opportunities for like founders that might not reach that scaling velocity in a way that can be like eaten by and scaled, of course, in a good way by these like kind of like structures. So it's a new beast forming in a way. I feel it's like something that we've seen. It has different wings, maybe different like shape and form, but yeah, we've seen it working. We've seen it growing. So that's interesting.
Yeah, I agree with you. So it's something different. I'm not saying it compares to the 400 million euros round. The companies that are acquiring, they are not at that scale, but still, as you mentioned, there's a component of liquidity. So closing the loop with providing liquidity to maybe investors in the very early stage. And second, it's providing expansion capability to companies that would not get to the Series B or C rounds because of many reasons. Lack of capital is one, but not the only one. There are others, of course.
Let me give a provocation. As a founder, why would I pick, I don't know, 100 million in venture versus 100 million in credit facility?
I don't know whether a founder would be competing. So whether they would be competing on that round. So there's probably one step below. So if you have a 100 million term sheet on the table, probably you wouldn't go for the exit. Probably. If you are a venture capital grade founder, you would go for the capital, you would want to stay 100% at the helm of your startup and go for the big one. But if you are a growing, profitable company, well managed, but not scaling for 4x a year, for 4x a year in revenues, so you will not get the 100 million term sheet on the table, but you have room to grow, what do you do? What can you do?
Yeah.
So it's kind of a limbo, not a bad limbo to be in, but still a limbo.
No, that's true. It's kind of this like a successful mid but not hyperscaling grade, as you mentioned, that might have like awesome opportunities of exit in a way that being acquired, getting cash, and then reworking on some new projects. So that's very interesting for sure.
So as you mentioned, it's a new different segment that is probably finding an interesting niche in the market. Shopseeker is one example, probably one of the most famous in Europe, but there are others coming up with very similar play.
And I would say very European flavored for whatever reason. All right, Nick, I think it's worth mentioning the work you guys have been doing on LLM, just shifting gears completely. I know you have like your secret passion, your secret nightly projects, exploring LLM and AI. So I'm always curious, like what's up with that. Basically for the readers of the newsletter, 2 weeks ago, Nick came up with one joint research talking about basically what's the future. Let me give the broad picture and then we can go into details a little bit. What's the future of SEO? So SEO is evolving. LLM are like basically gathering data in different ways. And there is a very interesting angle. And, the big takeaway here is that there is a big difference between LLM monitoring versus LLM execution plays and people that are building in these two fields. And the big thesis is that only the LLM execution builders are the ones that are gonna survive because they're providing the big value in the industry. So this is the overview, but I know that there are more details here.
Yeah. Well, if you want the details, you need to go to the article. But basically, it all started from a conversation with one of my portfolio CEOs around the future of SEO. Is very opinionated about it. Of course, he's operating in the space. And we were having this discussion about what's SEO, is it becoming something new? It is not. What's going on here? And So we decided, you know what? So let's research, let's open up the market and let's study it. What came up was quite interesting. I mean, we observed that there's a lot of um, excitement around tools that allow, broadly speaking, monitoring and observing what's going on with LLM search. So the new wave of AEO, GEO, or whatever you want to call it, basically optimizing your presence in order to be found by the LLM search function capability, OpenAI search or Perplexity or Google Gemini, whatever. As there's a lot of excitement there, there's a lot probably of panic in terms of customers, so brands and sellers. And this panic has been, somehow translated into the market with a lot of tools coming up to allow monitoring, keeping track, analytics, stuff like that. And this panic, this demand has kind of iterated. So a lot of companies raised a lot of capital to address this pain. That's super good. But our observation was around the long-term interest, viability about this opportunity. And what came up was that there's another kid in town, and that's the pure agentic approach to SEO. And that's the new beast. Whereas monitoring is more of the same. Once upon a time, you monitored your presence on Google. Now you monitor your presence on Perplexity or OpenAI. And that's, different architectures. Things are, somehow, of course, changing, evolving in some way. But it's the same problem. I'm the SEO manager. I'm a brand. I want to know whether I come up, I'm present on search results. But the new kid in town is about execution. It's in this space of, will agents take jobs away or whatever, or augment operators? And the observation is that there are, emerging specialized agentic platforms also in the SEO space that are basically addressing much broader problem, much broader capabilities that appear to be, fundamentally more defensible, more structured in the medium to long term. You can swap a monitoring tool easily once your data operations flows is engaged with an agentic platform that appears to be stickier for now. And this is what we observed in the space. And there are market data points that are interesting because SEO expenses, people working in the space, average salaries, they're going up, not down. So there's more demand for this type of capabilities. So we are seeing this opportunity expanding as we speak. So that's super interesting.
Yeah, I think there are 2 points which really grabbed my attention, which is number one, how sticky LLM execution companies can be. So the idea is that, coming up with a product based on agents that really take over a good part of your workflow. Let's say you're a content creator and you need to post, for example, stupid example, you need to post across different platforms, and it's not always easy. There are tools now that are doing that with agentic AI. And once you get it, once you adopt it as a workflow and it saves you literally like hours of work, you're in. I mean, it's so sticky, it's you cannot avoid it. So that's powerful. And I think that they have a point, like you guys have a point saying that, because if you can really solve for some specific pieces of workflows that, creators in general or other professionals can adopt, that's really the moat that actually can last longer. Monitoring is a commodity probably, again, things become commodity all the time, and maybe monitoring is one of those again. So that's the first sort of thing that caught my attention. The second one, which I'm sure you get excited as well, is the fact that Ontology is the new moat, and that's something I think you mentioned also. And ontology is a philosophical term, is coming back to life, and I'm very happy about it. And yeah, I mean, it's just basically saying, I need to provide the ontology of my website, my company, my services, which essentially is nothing else that, all the possible details that are relevant and are machine readable, so machine learning can read it properly. And then there you go. That's where is the future of SEO. So it's ontology based. So you probably will optimize ontology, I would say.
Yeah, I agree with you. So this a component. I mean, of course, you're an expert, and you mentioned ontologies, but I see it as the component of memory and learning. So understanding and remembering what the company is in our case, what the brand is, what's the product catalog, what their tone of voice, what they're doing, what they did, what they need to do, what they want to do, and going forward, and learning. So how the company is evolving and what's what is needed by these agentic function in order to operate. And that's a super interesting layer in the stack. So I am really interested into that part of the stack.
It's very interesting. Yeah. Very interesting. And we're gonna witness like a very change of how we perceive the web. And I think Musk said something on the lines where everything is gonna be run by AI agents. It's gonna be a chat. If I wanna buy something, they're gonna compare through an AI chatbot. But the website might still have value in the sense of their sort of artistic and high-end sort of premium feel. So some people want to argue that there is still some value there, not in a search sort of matter, but more in a sort of branding and marketing manner. So it's slightly different, which is still to me a little bit unclear, but I can see how maybe that can take shapes. So yeah, we'll see something super interesting. I know, web point whatever number is gonna be. So yeah, it's gonna be interesting. All right, Nick, thank you so much for joining to this episode, and I'll see you next week for an update.
Ciao, Jack. Take care. Ciao, everybody. See you in a week.